Hello and welcome to the channel. My name is Shannon Rivkin. In this week's video I'll be discussing Afterpay after its announcement in the middle of the week, discussing its quarterly numbers as well as its decision to explore a US listing. This is the performance of Afterpay versus the ASX 200 since the beginning of 2020, which is just before the pandemic hit. Really doesn't actually show an accurate representation of the overall market and the aggressive moves, because they've both been compared next to each other, starting from zero, and I guess to some degree it demonstrates the volatility and the performance of Afterpay, because certainly it took a bigger than the market hit as the pandemic took hold, and so many questions were presented for all companies. And I guess the worst case fears for Afterpay were that with a worsening economy, would people stop paying their Afterpay bills as they come due, and then ultimately, as we started to have a little bit more time behind us, we started to learn that absolutely the Afterpay bills were the ones that people were paying the first. Bad debts remain incredibly low, and not only that, Afterpay started to see a huge benefit from a trend to online shopping, with which it is incredibly well exposed. And we've now gotten to this point where we've had a little bit of a sell-off in the Nasdaq, started to recover a little bit as long-term government bond yields have stabilized, and where to from here. And I guess for Afterpay, the question is how can they reward shareholders even more than what they've already done. Now, it's an interesting thing for them to explore, because undoubtedly Afterpay's biggest growth business is its US business. It did, and not everyone knew this, it did not own 100% of the business for a while. It did have effectively some VC funds who had helped get it launched and had a stake in the US business. They've now bought out the majority of what was left behind, and now I think own 93% of that US business. And their view is that with tech businesses being more well appreciated in the US, and obviously it's still very big capital needs if it's going to continue to conquer the world, it believes, I assume, that it's going to get a higher multiple on the US exchange, likely the Nasdaq. Now, it's an interesting comparison because we have seen a competitor, an inferior competitor, but a competitor all the same, list on the Nasdaq in recent times, actually in December, Affirm, and we started at zero here, and it's used the listing price, and it did list at a significant premium, over 100% to that price. So it's not a great starting comparison. But over time, we've seen that they have, to some degree, followed each other, probably more severe falls for Affirm. And I should say, in my view, Affirm is not as superior a business. It's certainly smaller. It's growing slower as well. But although it still does trade at 22 times forecast revenue, which is a very big number for a company that is only growing at 51%, but it does show the market's bullishness on the buy now pay later sector, which is still in relative terms in its infancy. Afterpay trades at about 27 times forecast revenue. Its revenue is still growing a lot faster as it effectively is maturing in Australia, but seeing still very, very strong growth rates in the UK, in the US, and now likely Europe as it's expanding there. And I think this is, the real key here as well about the future is as it's very well exposed to e-commerce, and while it is starting to get traction in bricks and mortar retailers, there's no doubt that online will continue to be the breadwinner for the company. These are predictions from eMarketer that I've just grabbed about retail e-commerce sales in the US. This is just the US, I should say, so it's not global, but it is, as the US is the biggest market, it's instructive. Going up from $709 billion to 50% more or so in the next 4 or 5 years. I don't think that's particularly aggressive. I think that's exactly what you'd expect, considering the way the world's going. And that's not necessarily just obviously growth in overall retail sales, but a bigger market share. Australia lags that as well, so it's another reason to be very excited about the US, because the US has been a big adopter of e-commerce. But that's an interesting number to see, and Right now, as well, Business Insider predicts that the buy now, pay later sector will account for 680 billion, and this is US billion dollars, in transaction volumes in 2025. Now, Afterpay is absolutely one of the market leaders at the moment. I'd say perhaps Klarna and Afterpay probably stand out among the lot, and it, in its most recent quarterly update, said that they are finally tracking above that 20 Australian billion dollars, I should say, transaction value for the quarter. So it was a little bit, I think it was $5.3 billion for the last quarter, the March quarter. Now, they're growing quickly, so I think, in the last quarter, or rather I should say in 9 months from now, the quarter that starts then, I think you're going to see a far higher number than $5 billion for that quarter. So I think they're finally tracking well above the original 2023 aspirational level they were targeting, which was that $20 billion level at that point. It's clearly they're going to see that in 2021, and we continue to see expectations for this sector grow quicker and quicker. But if it grows to $680 billion, and right now Afterpay is only at $20 billion as one of the market leaders, it's pretty clear to see that the opportunity ahead remains very bright, and Afterpay, in my view, is one of the market leaders, both in market share but also in its business model. Certainly, the lifespan of a customer and the way they grow their transaction volumes over time, really supportive of the quality of the product. Certainly, from a retailer's perspective, it's a dream as it acts as a lead generator. And despite a very high multiple, it's hard not to be bullish for Afterpay's future. And while the only comparable I'd say on the US market trades at a discount, I think given Afterpay's superiority over a firm, I think there's reason to think that if they do end up listing in the Nasdaq, you might start to see an even larger premium appear, which would be good for all shareholders. So understand why they're doing it, and it should be an interesting few years ahead. If you like this video, please click like and obviously subscribe, and thank you very much for listening. I'll be back next week with a new video.